Hello everyone and welcome to our roundup session for November 2022. In this roundup, we'll be discussing recent changes, recent news, interest and penalty for delayed IGST payment, and a recent judgment of Mahindra and Mahindra which has come thereon for imports. Recent other important rulings regarding that. We'll end it with a synopsis of the entire session, what important points have been discussed, and then we'll take question and answer from the audience. So now to discuss recent changes, I'll request my colleague Neha to take it up.
Thank you, Deepak. Good afternoon, everyone. So recently, export transportation was made taxable with effect from October 1. So there are multiple issues arising in this regard. Because of taxability, IGST will be charged by supplier. And since transportation of goods are destined outside India, place of supply will be other territory. So ITC is allowed under law because it's not barred. However, we have seen in past that in case of domestic suppliers, departments may tend to disallow this ITC because place of supply is different from the state of recipient. So this issue might come since in our view, ITC is available. However, taxpayers can request government to provide a clarification. Further importantly, for exporters who claim refund of input stage unutilized ITC, so since ITC will be allowed in full, however, there will be an issue because irrespective that of the full ITC, refund of that ITC will not be allowed in full because refund will be allowed in export turnover ratio. So for example, like 40% turnover is export and 60% turnover is domestic. So that full ITC on the export transportation on input side may be attributable wholly to the export turnover. However, that refund will be restricted to the 40% turnover ratio only. So these are the issues which might come in this regard, and taxpayers may request for clarification.
So just pausing here for a second. What has happened recently is, and this amendment is quite important, that all the exporters, when they were taking the goods out of India, so domestic freight was always taxable. But when the freight was vis-a-vis from here to outside India, and the supplier and recipient were both in India, earlier they thought they don't want to tax it, so they brought in an amendment. However, because of incomplete amendment, the transaction was taxed. For the intervening period, they introduced an exemption. Recently, that exemption has been withdrawn. So now, because the tax is payable, number one, ITC should be available. Neha rightly pointed out that legally ITC is eligible on that. There should not be many issues regarding that. But even if ITC is eligible, there would be working capital issues. So what we suggest is that a representation can be filed. Number one, stating that the intent was always not to tax this transaction. This intent is coming clearly from the GST Council minutes. So that transaction should not be taxed, number one. Secondly, even if it is taxed, at least full refund is eligible, or let us say the ITC disputes that we foresee and department acting rationally in some matters, those things are taken care of by a subsequent, I'll say a suitable clarification or an amendment, whichsoever legislature proposes in this regard.
Yes. So next, in law, section 6 of the CGST Act provides for concurrent jurisdiction for taxpayers. So that is valid, and courts have also consistently held that concurrent jurisdiction is valid and is in accordance with law. So recently it was witnessed by the government that by the department that various practices was followed regarding issuance of recurring SCN and the consequential action to that SCN. So because of the concurrent jurisdiction, it might be possible that both of the authorities, center and state, they end up in not issuing SN or not taking the SCN proceedings to a logical conclusion. So it was clarified by the GST Council through a memorandum that is in line with the law again, that both center and state are empowered to take enforcement actions against a taxpayer. Now, consequential action after the issuance of SCN, like adjudication, rectification, appeal, etc. So they have clarified that that will lie with the authority which initiated the enforcement action. So to avoid the confusions and to for the uniform practices, so this will be the process. For refund, refund will be granted by the jurisdictional authority only, and again recurring SCN will be issued by jurisdictional authority. So the whole idea of this clarification by council is to avoid confusion and to take such proceedings to a logical conclusion by whosoever authority which has initiated that particular action. Next, in case this is regarding the issue of making pre-deposit payment through DRC03 or through ACES portal, etc., under pre-GST regime. So, in case of Sodexo India Services Private Limited, the Bombay Tribunal dealt with this issue. So, it was observed that multiple practices were being followed. That some taxpayers were paying pre-deposit payment through ACES portal through service tax challan or the excise challan, and some were also paying the pre-deposit through DRC03, which is the form under GST. So High Court, sorry, not the tribunal, the High Court observed that there is no specific legal provision under the erstwhile law which allows pre-deposit payment through DRC03. And that is, and they also, because that matter was also in parallel dealt by the CBIC through some letters or instructions, etc. So they finally directed the CBIC that they should issue a suitable instruction for permissibility of this DRC03, whether it can be an acceptable mode of payment for making pre-deposit. So in consequent to this judgment, the CBIC recently has come up with the instruction, and they have clarified that pre-deposit of duties and taxes under erstwhile regime that cannot be made through DRC03. That is not an acceptable payment mode. And they have directed and clarified that payment has to be made through the dedicated portal, which is ACES portal for erstwhile regime. And also in somewhere they have also indicated, in addition to this, that DRC is not even a prescribed mode for payment of GST pre-deposit as well. And also they have indicated that in addition, because there are two modes of payment of DRC03, through electronic cash ledger and through electronic credit ledger. So they have also indicated that pre-deposit, even though it is not a prescribed mode for GST purposes, but the pre-deposit can be made through electronic credit ledger. So to highlight that, in our view, this clarification is right, that DRC03 cannot be taken as an acceptable mode for erstwhile pre-deposit payments due to lack of provision. So the taxpayers should pay the pre-deposit only through the ACES portal. So coming on to the recent news, so there are multiple issues which are in talks recently. In last couple of years, government has tightened the scrutiny and audit measures to boost up the GST collections, etc. And in coming years also, they are aiming that more stringent measures will be taken, like to avoid or to catch the bogus invoices cases, malified practices, etc. So that can be seen in near future. And for minor GST offences, with an idea to minimize disputes, etc., the government may come up with a one-time settlement policy. For e-invoicing, the government has been from time to time reducing, taking the more taxpayers within the e-invoicing ambit. So now the taxpayers with annual turnover of over 5 crore, that also will be moved under e-invoicing concept from January 1, 2023. So from that day, the taxpayers need to identify these small vendors at the procurement side, because the implication would be that in law there is a specific provision that if the invoice is not in place, that invoice will not be considered as a valid invoice. So this is important. Now next, GST Council is expected to meet by mid-November. So multiple issues on board: tax on casino, online gaming, GST rates, rationalizations, etc. And another proposal is also in consideration to raise the limit to 5 crore for initiating criminal prosecution cases. And another important area apart from GST was the road tax scheme. So in road tax, there was multiple challenges, and there was multiple representations also were made from time to time regarding road tax benefit allowability for exports from SEZ, EOU advance authorizations, and a lot of data were also collated. So recently, the government has constituted a panel for determination of such rates, and in news, it is being said that they have to submit the report by December 20. So that relief and that benefit one can expect now. Yeah. So moving forward, like Deepak mentioned that recently the Mahindra and Mahindra judgment has came regarding interest and penalty leviability for delayed IGST payment on imports. Uh, so we ran a poll whether department has demanded interest and penalty on delayed payment of IGST on imports. So in majority of the cases, department has asked for payment of interest on IGST for delayed payment. So we'll see what is the levy provisions and whether it is correct to charge interest and penalty, and what was the implication of the recent judgment. So IGST is levied under Section 5 of the IGST Act, which says that IGST will be levied in accordance with Custom Tariff Act, and that's how the IGST becomes additional customs duties under Section 3(7) of the Customs Tariff Act on imports. Now, and for additional duties of customs, there's a charging provision, Section 3, subsection 12. So this provision is a borrowing provision which borrows certain provisions of the Customs Act. So it can be clearly seen that the provision says including those relating to drawbacks, refunds, etc. So nowhere it specifically mentions interest and penalty provisions for charging that interest and penalty for delayed payment cases. So, so yes, the provision is missing. So to highlight that, because interest and penalty provisions are substantive provisions in law, they are not procedural. The courts have also consistently held in past that interest and penalty provisions are substantive, and the levy for those need a substantive and specific provision in law. Also, the courts have consistently held in past in some of the rulings that this borrowing provision under 3 subsection 12 is interpretative to borrow the procedural aspects from the Customs Act and not the substantive aspect. So therefore, interest and penalty provision cannot be levied just borrowing this, just stating this provision. And in these lines, there were also many favorable rulings under customs regarding this additional custom duties, also regarding anti-dumping duty borrowing provisions. In line with this,
so just summarizing in the last slide only. So just summarizing point by point. Point number 1, on imports, IGST is levied under customs law and not under GST law. Second point, there is a provision of section 312 which borrows some provisions, but the language or the manner in which it is written, that language has been interpreted by courts time and again, and they have said that this is actually only to borrow the procedural conditions. You'll have a third set of judgments which have clearly stated that interest is a substantive provision. So reading these three together, we come to a conclusion that interest being a substantive provision is absent when it comes to levy of IGST, levy of interest on IGST on imports. So
yeah. So moving further on this point only, recently in the case of Mahindra and Mahindra, Bombay High Court, that they also analyzed this provision very rightly, and the High Court observed that there is a substantive legal provision missing under customs law regarding chargeability of interest and penalty. And they also held that for levy of interest and penalty, there has to be a substantive provision under the Custom Tariff Act only. So accordingly, the court held that there will be no levy of interest and penalty for delayed payment of additional custom duties. So in our view, this ruling is totally correct, because for the reasons we discussed just now, that there has to be substantive provision and not merely a procedural borrowing provision will create a levy of interest and penalty. As a repercussion of this judgment, which is in line with the earlier favorable rulings also, taxpayers under GST, as we ran a poll also, that mostly department has asked for interest on IGST on delayed payment. So for that interest or penalty, if any case has been paid, taxpayers can claim refund of that. That is a valid refund because it was never payable. And for claiming that refund, because due to the COVID period, Supreme Court extension of the limitation order was also there. So taxpayer can claim benefit of that while calculating the limitation period. And thirdly, because for claiming that interest and penalty, that needs to be accounted as receivables in books of accounts for keeping that claim live.
To satisfy the test of unjust enrichment.
Yeah. Now, related to this interest of IGST, which is an additional custom duties under additional custom duties, Interest provisions are also there under GST, which is provided under Section 50. So primarily it provides for two cases: for delayed payment of GST output stage and for wrong availment and utilization of ITC. So importantly, there arises two issues because we have witnessed that in both the cases there have been retrospective amendment. For payment of output GST, 3B was the return from the very beginning. Later, it was made the permanent return, that too with the retrospective effect from July 1. And for ITC availment and utilization on the wrong side, for charging interest on that, there were no provisions in origin under Section 50, which says that interest will be payable. Later, in origin, there was only the interest provision, which was the case of due to mismatch of ITC, and that was never implemented because of the whole return matching concept, etc. So later, the interest provision under Section 50 was amended, and it provided for interest on wrong availment and utilization of ITC with retrospective effect. So again, so important to highlight that in both the cases, the issue remains open today also, that whether for the past period before the amendment, even if it was retrospective, whether the department can actually collect interest on delayed payment and wrong availment and utilization of ITC. So this issue is open, and taxpayers can analyze their case if at all they have paid interest or the department is now claiming interest. So that needs to be seen whether it is legally payable or not. And in our view, because there was no provision before the amendment, interest should not be claimed. Yeah, moving to other rulings, I request Deepak to take over.
Thank you, Neha. So other important rulings here, Mahindra in itself is also a very important ruling, but just covering the other rulings also. So firstly, the Hero MotoCorp ruling in Supreme Court for promissory estoppel. A promissory estoppel in itself has been a very ticklish issue for past some times. We have seen many judgments being pronounced on the issue on excise exemption withdrawal, etc. This particular issue was vis-a-vis the budgetary support scheme which was introduced under GST. So all these area-based notifications which allowed exemption/refund of excise duty in specified areas, that was subsumed under GST, and subsequently a budgetary support scheme was brought in. This scheme allowed refund of GST paid, CGST paid and IGST paid in cash only to a particular component and not to the complete amount. So the petitioner challenged that I should be allowed full refund because full excise duty was exempted. The Supreme Court held that estoppel is not applicable in case of whenever the government excises the legislative function and changes the legislation only. And such change has been made in public interest. So because GST was introduced in public interest, the Supreme Court held that estoppel cannot be made applicable for this change and for continuing the benefit of excise exemption. However, they also noted that in some states, like in Jammu and Kashmir, there was a budgetary support from state side to allow a refund of the state taxes. So they permitted the petitioners to file representations before the state government and the GST Council to introduce a similar scheme. In our view, this ruling is not completely correct. Point number one, the refund has been limited only to the cash component and not the complete component which has been utilized from ITC. Vis-a-vis under the erstwhile law, what used to happen was that exemption was complete. And in that case also, because in that case, limitation of excise refund to cash component, there was no subsequent deduction of that. Therefore, in that context, both the exemptions and budgetary support are on a different footing. Secondly, the fact that the industries set up at that location basis the promise of the government cannot be discounted. So if not budgetary support or in any other manner, the industry should be compensated of when they decided to make an investment for benefit of that state. Moving forward we ran a poll on a very interesting and an important question of transitional credit vis-a-vis credit lying in ISD. So ISD is not a new provision which was introduced under GST. The provision was also there under the service tax regime. So question was whether the closing balance of ISD could be transited by you under the GST regime or did you face any problem? So majority of the participants did face a problem, and certain might not have been under the concept of ISG because of a single registration, etc. But this shows that the problem is actually prevalent across. In this regard, why this problem is important is and has been discussed in the case of Hero MotoCorp judgment of Delhi High Court recently. In this case, what happened was the petitioner challenged an instruction, an internal instruction, which stated that ISG cannot transit credit. In effect, the instruction stated that the closing balance of ITC would effectively lapse. In this case, the High Court said that that internal instruction and recovery proceedings which prohibit such transition of ISG are incorrect. ISG, of course, is a vested right and therefore cannot be denied. While passing this judgment, it also observed and took note of the earlier judgments which have been given. Two very recent ones are of the Bombay High Court in case of Colgate-Palmolive and cases of Unichem, wherein they suggested a detailed methodology also and directed the union to issue a circular on this. However, the circular has yet to be issued. Also, High Court validated the action taken by the taxpayer for transition of ISG. While the judgment is positive, there are still action steps which the taxpayers can take because of this, specifically in light of the High Court, Bombay High Court judgment which we discussed. Firstly, there might be certain corrections or let us say correct disclosures which might be required at an ISG date, which should be taken by ISG in order to ensure that number one, action taken at ISG is also valid, and secondly, the correct action has also been taken by the recipient units. Because if let us say the recipient units have not taken full action, there is a possibility that their credit might get disputed or denied. Secondly, this one-time golden opportunity of reopening of Tran is there, and it is there till 30th November. So, with the legislature framework that has come, which also shows to some extent the direction of the CBIC, though a formal circular has not been issued, can be followed to ensure that this transition of ISG, which was initially barred by the instruction, is taken properly and remains undisputed in future. Moving forward to the judgment of Madras High Court, it's another a very interesting issue. So recently what we have seen is there are many ASMT 10s which are issued for mismatch in the returns. And as a process, for return scrutiny, after return scrutiny, if there is any mismatch in ASMT 10 has to be issued. Post this, if let us say the department submits the clarification, that clarification is not found valid, a show cause notice is issued. Or let us say a DRC 01A, which is pre-show cause notice is issued. In this, the department issued ASMT 10 on certain grounds. However, while show cause notice was issued, that was on a different ground, which was not covered by ASMT 10. The High Court quashed the show cause notice, stating that you should have covered the issue in ASMT 10 or given a second ASMT 10 before proceeding to issue show cause notice on this, because it was a return reconciliation issue. On a stricto sensu basis, this requirement does not come from the law that for before issuance of show cause notice, you mandatorily have to give an ASMT 10. Having said this, I think the High Court ruling can be used in proceedings. The reason being that it gives you an additional opportunity to present the case and to, in that context, make submissions before the department. That this is the reason of return mismatch, which can in most cases be procedural also. Moving forward to the cases, there are two cases which have been issued. One by Telangana High Court, wherein they have stated the request was vis-a-vis amendment in GSTR 1. And the issue actually initiates from the fact that department is issuing notices, even for the past period wherein there have been differences in GSTR 2A and the credit availed. So let us say I am a recipient. In my GSTR 2A, ITC is not appearing. The department is issuing notices. So the recipient moves to the supplier that you made a mistake, and that is why the ITC is not appearing in my books. So the petitioner in this case approached the High Court stating that I made a mistake in the initial period because initially timely that GSTR 2A was not visible to my recipient. I could not make that correction, and therefore you kindly request me that amendment. The High Court in this case relied upon the Bharti Airtel ruling that you have to file returns basis your documents and therefore revision should not be allowed beyond the prescribed period. However, in Jharkhand High Court and same principle in other High Court judgments also, they have stated that because this is a revenue neutral issue, this is a procedural issue, they have allowed this request. So now with this, we have multiple rulings. This Jharkhand High Court and erstwhile rulings also permitting this amendment, mainly because this was a procedural lapse and they have allowed rectification. However, the Telangana High Court has taken a stringent stand. They've said this amendment should not be allowed. As I suggested, this amendment, the recipients also should take note, or probably the High Court could also have taken note of the fact that even if this amendment is not there, recipients ITC cannot be denied because the matching provision was not in vogue or not in effect at this particular relevant time. Moving forward to the advanced rulings now. There is an advanced rulings which is there, which has come, and the issue is actually very, very relevant for many coal purchasers. So this ruling, what happened was they were, as a principle, they were purchasing coal. The coal was given on job work to washeries. They were washing the coal. The coal rejects were being supplied. Just to update you that on coal rejects, when they are supplied by washeries, there is an exemption. The applicant in this case requested that whether that exemption would be available in this case or not. The AR held that because the GST is payable by principal and exemption is to a washery, the exemption would not be available. Secondly, second issue was ITC was also there, but just completing the issue. Actually, the AAR did not discuss the issue in completeness. They missed the issue that GST liability on waste and rejects is actually on the job worker also. It can be discharged by job worker. And if the interpretation which they took would actually make the exemption redundant, because exemption is subject to the condition that in the supply chain, no one should have taken the ITC. So the intent of the legislature, the intent of the GST Council and the notification in this case was to allow the exemption, which has now been done away with by the AR. Next, AR also discussed an issue and the applicant requested that if I'm not getting exemption, at least allow me ITC of the same amount, because this compensation cess is payable on a per ton basis and not basis value. AR said no. The right way to avail ITC would be on the basis of value, basis common reversal under Rule 42 and 43. And therefore, ITC would be eligible on that basis only, which again would be a very, very small amount. The AR was completely right in this respect that ITC should be available only on value, even though in this specific case, it does not lead to a, I'll say, a logical result, but it is a settled principle that once the formula has been prescribed, that has to be followed for determining cases like this common ITC. Moving forward to another judgment and another interesting advanced ruling. This advanced ruling has also again broken trend. In this case, the question was on registration requirement. The supplier registered in Maharashtra went to Orissa to provide works contract service. So the applicant requested that I can discharge my GST from Maharashtra only. I need not go to Orissa to take a registration. AR said that you would be said to be providing services from the site location. And since you are providing services from site location, you are required to take a GST registration there. There are multiple advanced rulings and also circulars which indirectly state that unless and until that location becomes a fixed establishment from where I have a degree of permanence, that should not become the location from where I am supplying services. And multiple advanced rulings on similar facts have stated that you need not take registration in every state. From a central location, you can discharge your liability. So this advanced ruling in that context goes contrary. The last set of rulings that we'll be discussing is on another interesting issue on canteen recovery, transport recovery, etc. So the advanced rulings recently have now started saying that no GST liability needs to be paid. They have taken support of the recent circular which came and also some other advanced rulings that have come. One of the advanced ruling, it stated it did not rely on the circular, but stated that because this is not the principal business of the applicant, GST is not payable. Now, this actually is an interesting issue. Legally, in our view, GST should be payable because this business has been defined in such a wide manner. Having said this, I think because seeing that end of the advanced rulings, the companies may consider, because it is binding on the applicant and the department both, they may consider seeking an advance ruling on this. Of course, taking into account all the pros and cons, but they may consider seeking an advance ruling on this issue and therefore avoid paying GST if, let us say, ITC denial does not become an issue for them. Now, just summarizing the entire presentation before we move to question and answers. We discussed about the taxability of export freight, the issues therein. We suggested that you can file a representation if, let us say, ITC accumulation issue might become into question. We discussed the recent clarification issued for authority for issuance of show cause notice. We discussed the clarification that DRC 03 is not an acceptable mode for making pre-deposit. A very important judgment and the implication thereof, we discussed that if, let us say, customs IGST, if there is a delay in payment of that, interest and penalty is not applicable. And if, let us say, you have paid in the past, you can consider filing a refund. We discussed interest implications on delayed payment of GST also for past. So once before the retrospective amendment came, making GSTR 3B as a return instead of GSTR 3, or correcting the provisions of ITC, interest on ITC, whether that interest is valid or not. For ISG credits, if they were not correctly transitioned, or let us say department is disputing, we discussed that a revision of Tran 1 is there, which can correct these Tran 1 credits. The contrary rulings of GSTR 1, after the statutory date, we discussed that the High Court have been giving the contrary ruling to that. However, vis-a-vis a recipient, they should still contend that even in case of mismatch, till the time the same was statutorily required, there should not be any issue. And lastly, we discussed the advance ruling on the GST on subsidized recovery on canteen and transport facility, that the rulings have now started saying that there's no GST liability on this. Thank you everyone for joining. Thank you for your time.